All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today is May 30th, 2025. And the top story this morning, the tariffs, the trade war. It's exhausting. It's repetitive. We've been here before, but here we are once again. President Trump this morning is angry tweeting, or should I say angry truthing from Truth Social about China. Around 8 o'clock this morning, a few minutes after 8 o'clock, President Trump posted a very verbose, as is typically his style, post on Truth Social talking about how he made a deal because he felt sorry for China and he was trying to help China. It's really very nice of him when you think about it. And he ends it with, China has totally violated their agreement with us, all caps, capital letters mean business. And he said so much for being Mr. Nice Guy. So why is that such a big deal? Why do we care? President says a thing on Twitter or Truth Social. Well, guys, we're right in the middle of a trade war, and we've had a lot of recent developments. Most of the market has priced in the end of the trade war at this point. We are significantly higher than we were in the lead up to Liberation Day. Most people, like the whole taco trade, is taken up, oh, Trump always chickens out, and so therefore he's just going to acquiesce. The Chinese are going to get what they want. The bond market is going to get what he wants. It's going to be a silly episode in U.S. politics that will fade from memory. Guys, this is all still going on. There are still tariffs that are in place, the 10% tariffs on everybody. The tariffs in China, I think, what are they down to, 45% now or 30%, which are still rather insanely expensive tariffs. And then, you had a lower court ruling came out and said, no, those tariffs are unconstitutional. That was the U.S. Court of International Trade or whatever it's actually called. And then yesterday, we actually had an appeals court temporarily reinstated those tariffs. So the on-again, off-again tariffs, they were off again yesterday, but now the on-again, off-again tariffs are on again today. Keep up. These things change day to day. The market's kind of exhausted from it. It's kind of tired. It's almost tuning it out. The market did react to President Trump's post on Truth Social, but it was kind of a muted reaction. It sold off a little bit. Now, the thing is, the reason why we care, why are we talking about, it's a post on Truth Social, it's a silly thing. There's going to be some kind of escalation is going to follow now. That's why we care, all right? If the president is on Truth Social and he's tweeting that they have violated their agreement with us, no more Mr. Nice Guy, then that means no more Mr. Nice Guy is probably going to follow up with something. Are we going to go back to 145% tariffs? Well, we've got a market that is entirely positioned for that not to happen. So a lot of people are going to be caught off sides if that happens. And, by the way, the whole court challenge, they temporarily reinstated the tariffs, but that challenge is still in place. It was just a temporary stay of that ruling while it's being appealed. And we all know this is going to the Supreme Court, which we talked about yesterday. We don't know how the Supreme Court is going to rule. And then the market is saying, well, it doesn't really matter how the Supreme Court rules because President Trump has all of these other obscure laws and loopholes that he could use to implement the tariffs anyway. So, look, I think a lot of market participants are probably overly optimistic that the trade war is already over. Guys, this is going to be a long, drawn-out conflict. I really don't think it's going to be over so quickly. There's a lot of unreconcilable differences between the United States and China, particularly pertaining to Taiwan, that are not going to go away just because Orange Man bad. And so I think a lot of people are wrongly positioned here, and the market is starting to react to that this morning. Now, also going on yesterday, we had President Trump had a meeting with Chair Powell from the Federal Reserve. President Trump said, I want you to lower interest rates. Chair Powell said, but I don't want to lower interest rates. And then that's pretty much it. That's the story. Why did that have to happen at a meeting at the White House? I don't know why that was even news. We've seen this little beef play out over Truth Social and through the airwaves, and with all the press fawning over Chair Powell saying, can he fire you? No, he can't fire you. Or what do you think about him when he said this? And it's silly, but everybody was talking about that yesterday as well. We've had a lot of earnings in the last couple of days. We had Costco came up yesterday. Big earnings beat, an 8% increase in same-store sales. Costco's doing pretty good here. It seems that the company is capturing market share. People are being driven into those stores for the perceived discounts, the cheap hot dogs, the cheap gas, whatever it is. Costco is benefiting from the trade war. They also gave us some color about where their goods are coming from, which country specifically they import the most from. I guess the market was a little optimistic that maybe they don't have as much exposure to tariffs as they previously feared. We had Dell earnings missed. Their revenue came in line, but they said a thing about AI, so the stock rocketed last night after hours initially. Now that has swung to a loss. Dell is now in the red this morning ahead of the opening bell. We had Gap is just getting crushed right now. Look, the apparel stocks are in bad shape here. We were talking about Kohl's yesterday, an abysmal report from Kohl's. Now, Gap's earnings actually weren't that bad. They posted 2% same-store sales growth. That's actually really good, all things considered. The state of the consumer, the state of the economy. But they posted that their guidance is going to stay in place, but that the guidance doesn't include the impact of tariffs, which could be as high as $300 million. And Gap stock is now having its worst day in years after that news broke down double digits this morning. There's a crazy story coming out of Facebook involving Anduril and Palmer Luckey. And I don't know if you guys have been following this story over the last couple of years, but there was a story came out yesterday about those two companies that's got a lot of people scratching their heads just saying this makes no sense whatsoever. We're going to talk about this one. We got PCE inflation came out this morning. It was largely in line with expectations. It was a little bit lower on the year-over-year headline number, but I don't think anybody's going to be too excited about that. Down in some aspects, up in others. It was kind of a non-event, the PCE inflation statistic. But we did get some economic data this morning that was very interesting. The goods trade balance, that thing slammed shut last month, nearly cut in half. Now, we've been talking about how GDP went deeply negative last quarter because of all the front running of tariffs, and everybody was trying to buy as much inventory as humanly possible before the tariffs go into effect, and that caused this huge blowout in the trade balance. Then the tariffs hit, and everybody stopped buying, and we saw the trade balance cut nearly in half for the month of May. Actually, I'm pretty sure this was April data. $87.6 billion. That's down from over $160 billion just a month ago. Again, it goes to show you that the whiplash that the economy is getting from the on-again, off-again tariffs. Now, it's a good bet the May numbers are going to go up again because the tariffs were off again. And then, okay, now quick, buy some more stuff before the tariffs go on again in June. So get used to the volatility in this trade balance data. That is not going anywhere. Got a lot to talk about once again this morning, guys. Why don't we shrink my big melon of a head and let's see what's going on in the markets today. And, well, markets are down here, but they're not down all that much here. We've got the S&P is off by 24 points, about 0.4% lower. You will notice right here between 8 and 8:05 is when we got the big decline in markets. That's when it started. That was Trump's post on Truth Social. I got to get down to the minute and see if it really did move exactly on that post or did it move a few minutes before. Maybe somebody caught wind of that story. I don't know. Just theorizing here. We've seen stranger things. But stocks are down a little bit here. We've got the Dow is also down 148 points or 0.35% lower ahead of the opening bell. And the NASDAQ is off by 84 points, 0.39% in the red this morning. Looking over at the dollar, it's a little bit stronger here by 7 basis points. Not that much of a move, 99.41 for the DXY. And looking over at the bond market this morning, not a lot of movement in bonds here. Barely a budge. The 30-year unchanged at 4.923. The 10-year is down less than 1 basis point, 4.417, barely moving there. The 2-year also barely moving at 3.939. That's up 0.2 points or 0.002%. And the 1 month is actually making the biggest move out of all of them at 4.293. That's up not even a half a point. So very little movement in bonds, a little bit of movement in stocks here. Now, something I wanted to talk about, we missed this one yesterday, but it's a story we were covering earlier this week and late last week, the Japanese super long bonds. And I just want to point out, we had a big decline yesterday. My guess is that has something to do with that court ruling in the U.S. I'm not really sure what that was, but that is the second big decline. I mean, look, the Japanese 40-year Treasury has fallen by almost 70 basis points over a span of about a week. That's after rising several hundred basis points in a span of about a month. So a lot of volatility still in the Japanese bond market. That bears watching. But for now, the bleeding out in Japanese long bonds is on pause. We're actually seeing quite a rally here when you see these yields go lower. That is, those prices going higher. Looking over at the commodities board, we've got gold is under a little bit of pressure this morning, but still above $3,300, $3,305 for spot gold. That's off by about $12.50 or 0.37% lower. Spot silver is also off a little bit here, 33.17. That's down by about 15 cents or 0.44% lower. I still like the shiny. Copper is up by 1/3%. Platinum is lower by 1.4%. Palladium lower by 1.3%. And we've got WTI oil is off by about 1/3% here, 23 cents lower at $60.71. We have had some more rumblings from OPEC Plus talking about possible increases in production in July. We should have more clarity on that tomorrow at their ministerial meeting. And looking over at Bitcoin, Bitcoin had a rough day yesterday. It's actually had a rough week here, 105,648. That's off rather sharply from the high of almost 112,000 that it hit just a few days ago. Bitcoin sold off a few grand yesterday. It's kind of unchanged here this morning, although it's showing up about $80 on Coinbase. Now, saw an interesting story this morning. Shout out to my moderator, Mish, who found this one. BlackRock's Bitcoin ETF draws record inflow during May's rally. So we've got people buying Bitcoin ETFs, but the interesting thing, the money that's flowing into BlackRock's ETF is coming from BlackRock's ETF, if you can believe that. BlackRock Inc.'s iShares Bitcoin Trust posted its largest ever monthly inflow in May as the original cryptocurrency climbed to a record while being touted by more proponents as an alternative store of value. The fund has attracted more than $6.35 billion in net inflows during the month, according to data compiled by Bloomberg. That's the most since its debut in January of 2024. The surge lifted total assets under management to over $71 billion, underscoring growing institutional appetite for Bitcoin amid global market turbulence. Now, that's important, guys. This is institutional appetite for Bitcoin, because the reason why institutions buy Bitcoin ETFs is because their rules and the laws that govern their conduct don't let them buy Bitcoin directly, but they are allowed to buy ETFs that buy Bitcoin. So the institutions are using the ETFs to get price exposure to Bitcoin. The surge in demand appears to come primarily from institutional investors seeking regulated exposure to Bitcoin amid economic uncertainty and inflation concerns, said Kirill Kretov, trading automation expert at CoinPanel. Notably, some of this demand is internal, as BlackRock's own strategic income opportunities portfolio, a diversified fixed income mutual fund, has increased its holdings of IBIT. So BlackRock's mutual fund is buying BlackRock's Bitcoin ETF, causing a big surge in inflows. And you can see in this chart here, they're showing this is monthly inflows since January of last year, when the Bitcoin ETFs were first officially approved. And May saw the biggest inflow ever, narrowly beating out the $6.2 billion from March of 2024. $6.35 billion flowing into Bitcoin ETFs. So that's probably what was behind a lot of that rally in Bitcoin we saw last week. All right, now let's talk about the story of the day. President Trump's post. This is what he actually had to say about China this morning, guys. Look, this is probably the biggest deal in finance, so we're going to read through this here. It's not an endorsement. It's not a condemnation. It just is what it is. 2 weeks ago, China was in grave economic danger. The very high tariffs I set made it virtually impossible for China to trade into the United States marketplace, which is by far number one in the world. We went, in effect, cold turkey with China, and it was devastating for them. Many factories closed, and there was, to put it mildly, civil unrest. I saw what was happening and didn't like it for them, not for us. I made a fast deal with China in order to save them from what I thought was going to be a very bad situation, and I didn't want to see that happen. Because of this deal, everything quickly stabilized and China got back to business as usual. Everybody was happy. That is good news. The bad news is that China, perhaps not surprisingly to some, and all caps here, has totally violated its agreement with us. So much for being Mr. Nice Guy. That was posted at 8:09 a.m. Eastern Time this morning, and the market reacted pretty much right away to that one. So much for being Mr. Nice Guy. I wasn't aware of Mr. Nice Guy, but it seems like he was being very nice to China. I mean, look, the whole first 9 sentences there is all about how he was so worried about China and made a very fast deal to help them. He was really being awful nice when you think about it. I'm picking up a little bit of the sarcasm here, I hope. So look, there's probably some kind of an escalation coming, and we kind of knew this was on its way. There was, before that post on Truth Social this morning, we had this one in Bloomberg. There were similar articles in CNBC. U.S.-China trade talks stall as tensions rise over student visas and arms sales. In such a flip-flop geopolitical world where U.S. tariffs are suspended and then they're not, it's hard to keep track of what's up and what's down. Just weeks ago, markets rejoiced as a de facto trade embargo between the world's two largest economies was called off, with U.S. President Trump declaring a total reset with China. Yet the reality of that reset is starting to look awfully familiar. Trade talks appear to be going nowhere, with U.S. Treasury Secretary Bessent calling them a bit stalled. Washington is continuing to tighten policies toward China through revoking student visas for Chinese citizens and introducing new curbs on the sale of chip design software. In just two examples, adding risk, Trump is planning to ramp up weapon sales to Taiwan to a level exceeding the pace set during his first term, Reuters reported. Also not mentioned in this article, but it was mentioned in the CNBC article, China is yet to lift its restrictions on rare earth exports to the United States, which was something they agreed to do in the initial plan to come up with a plan to have a trade deal that was announced in Sweden a few weeks ago. So this angry post from President Trump, you probably could have seen this coming. The writing was on the wall. There's no shortage of these issues. Have been points of contention in the ongoing talks. And, well, it looks like the president finally threw a fit this morning. Also, he was probably somewhat emboldened by a lower court, which had temporarily reinstated his tariffs. Trump tariffs reinstated by appeals court for now. Look, we're not going to read too much into this, guys. That's pretty much the whole story in a headline there. While the court is reviewing this lower court ruling, they have temporarily stayed the ban, and so the tariffs are on again. They may go off again. They may not. If they go off again, they'll probably go on again. So on again, off again. That seems to be the way of things. This is exhausting, I'm telling you. Also, again, we're not going to spend too much time on this, but the market was talking about it a lot yesterday. Trump tells Powell he is making a mistake by not cutting interest rates. No, he's not. We don't need lower interest rates. We need less easy money in this economy, but I digress. This is nothing new, this debate between Trump and Powell. They had this during Trump's first term. They're having it during his second term. Trump wants lower rates and easy money. Powell does not. And so that's still going on. Let's talk a little bit about earnings. Costco tops earnings and revenue estimates as sales jump 8%, but shares still dip. Costco kind of the victim of their own success here this morning. Shares of Costco fell slightly on Thursday, despite the warehouse club posting quarterly earnings and revenue that topped estimates and reporting 8% year-over-year sales gains. Unlike many retailers, Costco does not provide an annual outlook, yet the company's leader spoke on the earnings call about the challenges higher costs and tariffs have meant for his business. Earnings per share came in at $4.28 versus $4.24 expected. That's a beat. Revenue of $63.21 billion. That was a narrow beat of $63.19 that was expected. Also, comparable sales, an industry metric that takes out one-time factors such as store openings and closures, rose 8%. Fantastic same-store sales numbers for Costco. And e-commerce sales rose nearly 16% compared with the year-ago period. That's excluding gas and the impact of foreign exchange. As tariffs raise economic worries and potentially consumer prices, Costco could stand to benefit. Unpredictable tariff policy could help drive more customers to the warehouse club, which is known for its competitive prices and bulk discounts, and encourage them to renew membership. Its club also sells discount gas and groceries, which are steadier traffic drivers even when consumers pull back on spending. And compared with some other retailers, Costco has had a stronger hand in price negotiations with suppliers because of its large size. About a third of Costco's U.S. sales are goods bought in from other countries, CFO Gary Millerchip said on the company's earnings call. He said items imported from China represent about 8% of total U.S. sales. Now, Costco shares down a little bit here ahead of the opening bell, off by about 0.75%, trading at $1,001.32, off by about $7 here. But look at what it's done over the last year. The stock is up about 25% versus where it was a year ago. So looks like expectations were already pretty high. They were really good earnings. Same-store sales numbers were fantastic, but this stock has run so much, it was due for a pullback. We also got earnings from Dell yesterday. Dell shares climb after the company raises full-year profit outlook on AI demand. AI. Shares of Dell Technologies rose on Thursday in extended trading after the company raised its full-year earnings forecast and issued stronger than expected forecast for the current quarter. However, Dell's adjusted earnings per share came up short versus estimates on inline revenue. Earnings per share was $1.55 versus $1.69 estimated, and revenue of $23.38 billion was just a narrow beat versus $23.14 billion expected. Dell said they expect $2.25 in adjusted EPS for the current quarter, with between $28.5 and $29.5 billion in revenue. That is significantly higher than initial expectations. So maybe that guidance was initially propelling Dell stock higher yesterday after they reported the earnings. Dell is one of NVIDIA's primary vendors that build systems around the chip makers' AI graphics processing units. Dell said on Thursday that it was seeing unprecedented demand for AI systems, especially from second-tier cloud providers such as CoreWeave. Remember, CoreWeave just got a whole bunch of money from SoftBank, Magnetar, and also OpenAI and NVIDIA themselves. And so they're taking that money. They're buying more chips, going further into debt with it. That is propping up Dell's order book. Now, Dell stock was initially up rather significantly on this news, and now they're actually down 1.6%, $111.95. That's off by about $1.83 this morning. Another earnings report we got here. Gap sees sales stalling and puts a number on the extra cost of tariffs, and the stock tumbles. The extra cost of tariffs is going to be pretty high for Gap. Look, guys, the apparel makers in particular, they are not the apparel makers, the apparel retailers are particularly vulnerable to tariffs here. We saw that with Kohl's yesterday. We're seeing it with Gap this morning. Anybody who sells clothes, they've got problems if these tariffs come back. And it looks like the tariffs are coming back, at least for now, before going away and then coming back again. Investors late Thursday looked past higher than expected sales and profit at Gap to worry about the retailer's call for flat current quarter sales and stubborn weakness for the Banana Republic and Athleta brands. The worry sent Gap stock tumbling 16.5% in pre-market trading Friday towards its worst one-day performance in 3 years. And with the stock headed for a fifth straight decline, it was also on track for its biggest weekly loss in 5 years. Gap kept its 2025 outlook intact, but said it didn't include the potential impact from tariffs for the fiscal second quarter. The company said sales would likely be flat, while Wall Street expects slight growth. The Trump administration's tariffs, which are in limbo after a couple of court orders, would result in gross additional costs of about $250 million to $300 million, Gap said. The company said it had strategies in place to mitigate more than half of that amount without providing further details. After taking that into account, Gap said it sees a remaining net impact of about $100 to $150 million in fiscal 2025 operating income, mostly falling on the second half of this year. And it's that forecast about the impact of tariffs that's really hitting Gap here. The stock is down almost 17% ahead of the opening bell, trading at $23.20. Now, look, Gap had been on a pretty incredible run for about a month since mid-April. This stock ran from, it was about $17 to as high as $29. I don't know why Gap was rallying like crazy, but now giving up almost half of that instantly following those earnings results, basically flat versus where it was a year ago. All right, now we got this story. This story, it's kind of hilarious, kind of not. Mark Zuckerberg finally found a use for the metaverse. War. It's not so much that metaverse finally found a use, and because I don't think the metaverse actually found a use, right? No, we're not going to have wars in the metaverse, just like we're not going to have parties in the metaverse. It was a stupid idea to begin with. But it's who Meta is teaming up with. That's kind of hilarious here. Meta is crossing a former hard red line in Silicon Valley to develop tech for military uses. There's Zuck with his glasses on. I can't think of any other deal that more encapsulates how Silicon Valley has changed in the past couple of years than this one, announced Thursday in a press release. Anduril and Meta are partnering to design, build, and field a range of integrated XR products that provide warfighters with enhanced perception and enable intuitive control of autonomous platforms on the battlefield. By the way, autonomous platforms on the battlefield, they're almost certainly talking about drone controllers. For starters, Anduril Industries is a defense tech company co-founded by Palmer Luckey, the man who created the Oculus VR headset that was acquired by Meta Platforms for $2 billion in 2014, only for Luckey to be pushed out when it emerged he had financially backed a pro-Trump campaign group. That he would be welcomed back with open arms is yet another sign that such stances are no longer taboo in the halls of Silicon Valley companies. It could be argued they never should have been. Yes, people should not be fired over their personal politics, Bloomberg. I realize you have to like swallow your vomit to say that because we're talking about a conservative here, but people shouldn't be fired over their personal politics unless they become violent, that is. But this is hilarious because Palmer Luckey, he founds Oculus. Facebook buys them for $2 billion. And then 2 years later, they find out Palmer Luckey gave money to a pro-Trump PAC and they fired him over it. And then here we are a few years later, and they're cutting this big deal in this joint venture to go work with Luckey's new company, Anduril, that he founded after he got fired from Facebook. And now Anduril is one of the most rapidly growing defense contractors in the world. And now Facebook is back to working with him. Second, developing technology for war had been considered a hard red line for many of the engineers working within those leafy campuses, at least in the era after the dot-com boom. At Google, for instance, workers in 2018 held walkouts and forced executives to abandon projects related to military use. Today, defense applications of technology are something campuses want to shout from their rooftops, not bury in the basement. Again, it could be argued that should have always been the case. Who will create tech for the U.S. military if not U.S. tech companies? So, I mean, it's nice to see that Meta is taking a break from emotionally traumatizing young girls, and they're getting into death and destruction now. And they're working with the guy that they fired over his politics. Isn't that kind of fun? Well, that's Silicon Valley for you, folks. Let's go straight to PCE, by the way. We got the inflation data this morning. We're going to go through this pretty quick because it was kind of a non-event. The annual PCE inflation in the United States came in at 2.1%. That is declining rather sharply from the 2.3 and 2.7% that we had in March and February, respectively. It's a little bit better than expected. The market was expecting 2.2. We got 2.1, so it's a bigger decline. We've seen headline PCE, the year-over-year change, come down pretty fast over the last 2 months here, still above the Fed's arbitrary 2% target, which we have not hit in many years. On a month-over-month basis, we got PCE inflation of 0.1%. That is up slightly from nothing a month ago. The market was expecting 0.1%, though, so that one is in line with expectations. Core PCE, which strips out volatile food and energy, that came in at 2.5%, in line with expectations of 2.5%, and down slightly from 2.7%, which was also down slightly from 2.9% in February. So those year-over-year core numbers are looking pretty good also. And on a month-over-month basis, core PCE inflation was 0.1%. That is in line with the 0.1% expected and flat versus 0.1% a month ago. So personal consumption expenditures was down, but it was pretty much in line with expectations. No big surprises there. Now, the one thing we're going to mention here, personal income in the United States. Big beat on personal income, 0.8%. What was the market expecting? I forget what the market was actually expecting. The market was expecting 0.3%. So a big beat on United States personal income, up 0.8% year over year. So Americans are getting a raise. Again, it's too little too late because inflation hit hard and fast years ago. They're just playing catch up. Another thing, though, I wanted to mention here, guys, look at this goods trade balance in the United States. Now, by the way, these yellow bars, that means this is a negative number. We still import way more than we export. But look, it's a much smaller negative number than we had from a month ago. $87.6 billion for the month of April was the United States trade deficit. That is down from $162 billion a month earlier. Now, that $162 billion, we had seen that number blowing out in the first quarter as all of the retailers in the United States were front-running tariffs, buying as much inventory as humanly possible before the tariffs hit. Then the tariffs hit, and they stopped buying. And we saw this slam shut. This is actually the lowest we've seen since about December of 2023. Now, still, the trade balance in the United States is much higher than it was pre-COVID. We still haven't recovered anywhere near the roughly $50 billion a month that we were doing back then. But a pretty big decline here. Now, it's probably going to get bigger again for the month of May because the tariffs were off again. And then in June, maybe they're going to get higher depending on what happens from this tweet. I really couldn't tell you where we're going from here. But that will at least add a little bit of positivity to the GDP numbers for the second quarter. Trade balance is a negative. It's a drain on GDP. So a smaller trade deficit should put upward pressure on those GDP numbers. And I just want to say thank you very much to Mr. Frank. Hey, Frank, thank you for gifting 10 Nobody Special Finance memberships. I appreciate the support of the channel, Frank. Thank you, sir. And guys, if you received one of those memberships, be sure and say thank you to Frank. And I don't know why it's not coming up, but I saw M&J had sent one of those as well. M&J, it's not coming up, but I saw you do it. Thank you so much, M&J, for supporting the channel as well. Guys, if you received any of those memberships, be sure and let them know you are grateful. Say thank you to M&J and Frank in the comments. Mr. Hunt and Cover, who's been a Melonhead member for 15 months. Thank you, Hunt and Cover, for supporting the channel. He says, happy Friday, Jack. Melon mania is real. All right, I'm a mania now. All right, that's good. We're round-tripping melons now. We're creating a bubble. We're inflating my ego. Sure, why not, Hunt and Cover? Thank you, sir, for the good vibes and the support of the channel. Richard Bell, what's going on, Richard? He says, Stargate, Texas, 3,000 workers, endgame question mark, 2028 goal. Why Stargate in Texas? Is that the Oracle data center in Texas that was already under construction before they announced the Stargate project? 3,000 workers, that's probably 3,000 people are working on building that Oracle data center in Texas. Again, with Stargate, they took a whole bunch of projects that were already underway. They put them in a box and they called it Stargate. And they're like, look at what I have done. So Stargate wasn't anything new. It was just a line they drew around a bunch of things that were already there. What's the end game, the 2028 goal? Keep the bubble inflated. That's the only goal. Like, survive another day. This bubble is ridiculous. It is freaking ridiculous. We are selling technology to the Chinese treasonous companies, and I do mean treasonous, guys. This ends with Jensen Huang in handcuffs, one way or another, either for treason or for fraud or for both. I cannot wait for this guy to be in bracelets. What they have done is disgusting. They have ripped off and robbed so many people. All these AI bros who think they're making so much money have no idea it's going to all go up in smoke. And by the time they realize it's happening, it will have already happened to them. If you're one of the few who's been YOLOing into options and you've actually booked your gains, congratulations, you're making money on fraud. I hope you sleep really well at night with that. But look, AI is, I maintain what I've always maintained. It's a neat new technology. It's going to enhance productivity, but it's not going to replace everything. It just isn't. Much like the internet didn't replace everything. It added to, it created a whole new industry, but not before all the internet stocks went belly up and bust, because it was really just a cool technology with a round-tripping scheme attached. That is exactly what the AI mania is. And you can call it Stargate, you can call it Star Wars, you can call it Babylon 5, whatever you want to call it. Doesn't matter. It's still just accounting fraud with a sci-fi angle drawn around it. Thank you, Richard, for supporting the channel. Nashville Pasta Man says, Costco is the largest retail, I think you meant to say, seller of gold. You know, check out that interview I did with Bob Coleman. It was about 2 weeks ago. We talked about those Costco bars. They put the limits on the number of bars you could buy per member because you had people were going in, buying those bars on the credit card, getting the points. Then they were going to the coin shop, selling the gold bars to get their money back, going back into Costco and doing it again. It was basically an arbitrage gimmick, and it only worked because the price of gold was going up the whole time they were doing it and they were collecting their points. So I wonder, is Costco really the largest retailer of gold now that they put that limit on the gold bars that says you can only do that once or twice? And so those guys who are doing it wholesale, they've now been prevented from doing that again. So more data required on that one. But look, Costco selling gold bars, it is one of those 2020's bingo updates. And I like to see it. I think more people are getting wise to this endless game of monetary repression that the central banks around the world have been inflicting upon us. And the fact that people are buying gold at Costco in order to protect themselves from it, I like the shiny. Let's just put it that way. Thank you, Pasta Man, for supporting the channel. And Uncle Fedster says, happy Friday, Jack. Will you hold crypto through the winter? All right, let me just say crypto, no. I don't mess with crypto. I don't get into shit coins, altcoins, meme coins. I don't touch any of that stuff. Bitcoin, probably. All right. I have Bitcoin in two different places. One, I set it and forget it. I just buy a little bit every week and I just leave it there. That's going to stay. And I'm going to leave that through the whole cycle. It's always been my plan to not touch that until 2030. I've got another account where I do a little bit more trading in. I will be looking to take profits on my Bitcoin in that account between now and October. All right. My plan in that account is to have my Bitcoin holdings down to near zero, not quite zero, but near zero before the end of October. Why? Because I think sometime between now and the end of October is when we're going to get somebody big blowing up and crypto winter was set in. So that is my personal approach. I have not taken any profits yet. That will change very soon. Thank you, Uncle Fedster, for supporting the channel, sir. I appreciate that. It was a good question. Piggo's Trading Desk says every day is Taco Tuesday. The taco trade. Yes. Trump always chickens out. That is the worry, right? They say, oh my God, Trump was insane to put the tariffs on. And then Trump takes the tariffs off and they say, Trump is a chicken. He took the tariffs off. And then if Trump puts the tariffs back on, they'll say Trump is just overcompensating because they said the mean thing about taco. And if Trump doesn't put the tariffs back on, they'll say, yeah, see, the taco people were right. Trump is a chicken. Look, no matter what Orange Man does, the press is going to take the other side of the trade because Orange Man bad. All right. President Trump could come out opposed to smallpox tomorrow, and half the world will be like, yay, smallpox. Smallpox for the win. That's just how the world goes. All right. Look, Orange Man has a blustery style. He has a conduct that is unbecoming of a statesman. I think anybody who is capable of being impartial can see that. At the same time, we have half of the world has been driven fundamentally insane by their hatred of him because of his mean tweets, that they don't really care what he does as long as they are opposed to it. It's kind of how it goes with trade. Dude, take all the decisions in a vacuum by themselves on their own merits, on their own merits, and forget who's doing it. That's the only thing I can tell you. Thank you, Piggo, for supporting the channel, sir. Hunt and Cover says, coffee time for Gigi. Well, thank you, Hunt and Cover, for buying Gigi a coffee. I appreciate that. And I might get a coffee too. $20 buys a lot of coffee. I might sneak one of those as well. But thank you, Hunt and Cover, for supporting the channel. I appreciate the generosity, sir. Russ the Beekeeper says, building Stargate Center in Abilene, 40 miles from us, from on us, 40 miles from you. Okay, the Stargate Center. I'm pretty sure that Stargate Center in Abilene, that, correct me if I'm wrong, Russ, but that is the Oracle data center, and that has been under construction since 2021, right? That's the same one. I could be wrong about that, but I remember when the Stargate project first came out, Larry Ellison posted this aerial drone footage of all of this construction going on. It was a 2-year-old video, as if to say, like, look, we're already building Stargate. Well, yes, you are already building Stargate because Stargate was under construction before Stargate even existed. Again, it's existing projects that they're just calling something new now. Thanks again, Russ, for supporting the channel. Piggo's Trading Desk says, does Yellen like tacos? Well, I got to think about how does Yellen like tacos. Well, I can tell you that my dietitian tells me I need to lay off the tacos, but I have a theory about tacos. You see, if you put a whole bunch of ground beef on a taco shell, but then sprinkle a few measly shreds of lettuce on top of it, because it has lettuce, it's now technically a salad, and therefore it's healthy for me. So I like tacos because I'm eating more salad, and therefore, yes. There you go, Piggo. Janet likes tacos because, well, a taco is a salad from a certain point of view. Thank you, Piggo, for supporting the channel and for queuing up my Janet as always. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys rock. Thank you guys so much for the generosity and the super chats, as well as you, my magnanimous Melonheads on Patreon and YouTube. 2 p.m. Eastern time today for our weekly get-together on Zoom. Links down below should you feel so inclined. Don't forget that like button and that subscribe button on the way out for the algo if you feel so inclined. And hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.